morning. This is Robert Kaars Sijpesteijn bringing you this morning's market update. Yesterday saw Apple release its latest line of technology, making radical changes to its Apple TV and iPad, two product lines that have underperformed its iPhone in recent years, as it seeks to dispel doubts about the momentum left in its flagship smartphone. A supersized 12.9-inch iPad, including a keyboard case and a $99 stylus, accompanied the iPhone 6s launch, alongside a new Apple TV set-top box featuring a motion-sensitive controller, Siri voice control, and App Store. Despite these updates, the iPhone still carries the majority of Apple's revenue, with sales of the iPhone in China rising by 75% in the past year. Tim Cook addressed this issue in order to dispel concerns among investors about Apple's prospects in its most vital growth region. Following the announcement, Apple's shares rose slightly, however ended the day down $2.67 at $110 a share. Not only did Apple fall, but all indices in the States fell. The US 500 dropped 31 points to close on 1,938.35. The US Tech 100 shed 63 points, closing on 4,240.05, and the Wall Street fell 251 points to close on 16,231. Over in Europe, the gains Asia had made earlier in the day yesterday helped rally European markets in early trading, however resulted in the indices ending down overall on the day. The UK 100 hit a high of 6,302.8, however closed down 28 points on 6,148.6. The positive movement early in the day was down to the mining sector, reeling back due to the positive sentiment that was coming from Asia. The Germany 30 had the same type of movement, hitting a high yesterday of 10,523.8, however closed down 247 points on 10,141.2. In the commodities sector, gold made a sharp downward movement, dropping $14.8 to $1,108, and Brent crude reached a price above $50 a barrel yesterday for the first time in 3 days, however quickly retreated to close down at $47.44 a barrel. In global news, Standard & Poor's cut Brazil's prized investment-grade credit rating to junk on Wednesday and warned that it could lower it again in the coming months. In a major blow to President Dilma Rousseff's government, S&P attributed the move, which surprised analysts who had not expected such a downgrade until at least next year, to government backpedaling on its budget deficit targets, as well as what it described as divisions in Ms. Rousseff's cabinet over fiscal policy. Emerging market central banks have urged the US Federal Reserve to raise rates sooner rather than later in order to end the uncertainty over Fed policy that has pummeled stock markets and currencies in recent weeks. These thoughts contrast with warnings from the World Bank that a decision by the Fed to raise rates for the first time since 2006 at its policy meeting next week could destabilize emerging markets. The bank's chief economist, Kaushik Basu, warned the Fed should keep rates on hold next week to avoid panic and turmoil in emerging markets. In today's corporate news, Volvo has announced plans to launch a global range of compact vehicles as it enters phase 2 of expansion plan. WM Morrison reported total sales of £8.1 billion for the first half of the year, down 5.1% year on year. Dixon's Carphone announced group revenues up 8%. And John Lewis reported revenue up 1.9% year-on-year at £144.9 million. Today's economic data in focus at 10 a.m. sees Greece release its unemployment rate for June. At 12, the UK released the Monetary Policy Committee interest rates decision. And at 1:30 in the US, we see the initial jobless claims for September, as well as the import price and export price index for August. That's all for today's market update. Thank you. And goodbye.